welcome back. You're watching Stock Picks. Today, Anthony Clark from Small Talk Daily Research brings us insights on Novus's recent performance, a side visit to Raubex and Afrimat's Investor Day, insights on small and mid-cap stocks and how they've reacted to news of a government of national unity. Anthony, thank you so much for your time today. Good afternoon.
Yeah, good afternoon. It's a momentous day as President Ramaphosa is basically sworn in for his second term, and the country is cheering, as is the stock market and the currency.
I want to speak about that a little bit because, of course, we had markets very clearly before even voting, setting their expectations. It looks like those expectations to date have been met. And, of course, that's why we're seeing this rally, Anthony. But South Africa and execution, that's not our strong point, and that's where markets could be disappointed in future.
Yes, I think we saw when President Ramaphosa was first sworn in as president many years ago, we saw a Ramaphosa rally in the stock market, which quickly fizzled out. As we all know, all talk and no action. So hopefully in this parliament, he'll be more action and less talk. But as it stands right now, the currency is clearly voting in the president's favor. I'm looking at my data points here. On the 22nd of April, the rand was at 19.19 to the dollar. Today, it's at 17.99. It's strengthened by 6.3%. And literally in the last few days, the stock market has turned around and seen significant gains in the key indices, particularly, interestingly, in the mid-caps, where we've seen major international investment banks like JP Morgan, Morgan Stanley, and Goldman Sachs in the last few days significantly upgrade the prospects for the economy and the underlying economic growth of this country. And that has seen a stampede of investors, particularly into retail, banking shares, and interestingly, the mid-cap sector, where gains of between 8 and 22% have been seen in certain stocks in the last few days as investors clamour to focus on domestic stocks which could benefit from this government of national unity and hopefully some better economic policies.
Before we move on from this one, Anthony, where I haven't seen at the base, I think we are seeing rally today. Resources, they're up a bit today, but they haven't quite enjoyed the rally like the other indices. I'm keen to get your thoughts here, just the global picture with commodities really dominating that part of the market.
Yeah, it's a great point. What we've seen, particularly in the commodity sector, is yes, there's been a global commodity boom in certain minerals. But the key minerals that this country basically has for export, iron ore, coal, diamonds, amongst others, have not fared as well internationally as some of the other key commodities. And as such, with a strengthening rand, it doesn't bode very well for our mining sector, which have costs in rands. And the international prices have been benign in certain instances. Iron ore, for example, has fallen from $144 a ton at the beginning of this year to $107 currently. And the only commodity that we export in reasonable volumes, although we have declined substantially over the last 20 years, is gold. So that's been doing quite well. But gold is not enough to rescue a fairly moribund domestic mining industry. So the ironic thing is a stronger rand may be good for the underlying country and the consumers, but as an exporter of commodities, it will not do the mining companies very well. So sadly, it's a swings and roundabout scenario here. Domestic stocks with domestic focus have done quite well, particularly those with an interest rate sensitive focus, but mining companies have yet to benefit purely because the commodities that we operate in this country have not been in favor, and of course the rand has strengthened.
Hopefully we can see a better picture towards the end of this year, Anthony. I want to get into today's stocks, maybe starting off with the two that have quite a little bit in common, Raubex and Afrimat. Which one would you like to start with?
Well, we'll start with Afrimat.
Okay.
Again, they had results out in the middle of May. They saw headline earnings per share up 24% to R5.67, paid a very nice dividend of just under R2 a share. And year to date, the stock is up 10.6%. It's trading at about R70.52 as I currently speak. But as I put on my Twitter page, literally before we came on air, despite the Ramaphosa rally in the market because of the government of national unity, infrastructure stocks have not really led the charge. It's been led by the banking sector and the retail sector. But one would instinctively believe that if a government of national unity really wanted to create employment growth, economic growth, and upliftment in the general economy, they'd have to spend substantially on upgrading the infrastructure in this country in terms of rail, ports, roads, etc., etc. So I'm quite surprised that Afrimat and Raubex have not really run in the last few days. Interestingly, Murray and Roberts has. They're up over 40% in the last 30 days. In Afrimat's case, they had an investor day in Johannesburg last Wednesday, which I participated in. And the key takes I received from that is the first 6 months are going to be slightly tougher for the stock. The largest component of their revenue and profitability comes from iron ore. That has fallen by about 25% in value terms year to date. And again, with a strengthening rand hindering the export component. And of course, Transnet not exactly coming to the party regarding the efficiency of getting product from mine to port. I can see Afrimat having a bit of a benign results period to their August interims. However, weakness in iron ore will be offset by a much stronger contribution from anthracite, which is used in many mining applications and steel smelting, and from the substantial uplift in construction materials that they have seen in the last 12 months, again, tying into what I believe is a good growth in roads and underlying infrastructure. So I certainly wouldn't be selling Afrimat off at these levels, but I think the stock at 70 Rand 52, I have an 80 Rand target, but I think it might drift for a while until this 6 months is over. Moving on to Raubex, they had an investor day in Johannesburg last Thursday, which was extremely enlightening. Now, for most of your listeners, Raubex is predominantly known for being a road builder, the country's largest builder of roads. And I spoke to the general manager of that roads division, and I'm going to give you a direct quote here. He says, Anthony, I have seen more tender activity coming out of government and the South African National Road Service, SANRAL, in the last 6 months than we as Raubex have seen in totality in the last 6 years, stating that there is plenty of money in the government system to spend on uplifting roads. The problem is that SANRAL does not have a skill set to actually implement all of this spending. So there's a bottleneck. There's lots of goodwill, lots of money, lots of tenders, but the actual implementation of awarding the tenders and dishing up the money is a little bit constrained, but the intent is there. And Raubex year to date is up 32%, with a share price at 36.89. It's had a good run. But I think if government does start to spend on infrastructure uplift, I think Raubex to me would be my #1 pick, followed by Afrimat.
I'm very interested in Raubex's story also, Anthony, because of course, when we were talking about the big five in construction, we didn't really include Raubex. I don't remember them being a part of it, but they seem to have managed to keep their construction roots, of course, in civil works, looking at roads, but I think still very important to see them survive that construction crash, I'll call it, and now still being able to thrive and being at the right place at the right time for a possible boom in infrastructure spend for the government.
Yeah, great comment. As hindsight or as background, Afrimat listed in 2006 and Raubex listed in 2007, just before the World Cup boom, as you discussed. Then after the World Cup boom, post-2010, the sector pretty much fell in a heap, and many companies basically fell by the wayside, like Basil Reed, Group 5, amongst others. And only a handful of companies basically survived. Afrimat and Raubex are the two largest players, but are basically still kicking and screaming in the sector. Even the once mighty Murray and Roberts basically fell in a heap, and it's still a small cap company. Raubex with a market value of around 6 to 7 billion rand, stuck to what it knew, building roads and building them extremely well. And it also moved into Australia, one of the few companies in the construction sector that moved into Australia and has not lost its shirt in operating in that country. Every other player, like Wilson Bailey, Murray and Roberts, amongst others, went in and lost pots of money. So I think Raubex stick to their knitting and they do what they do extremely well. And I think given their focus on roads and civil engineering works and in public-private partnerships, I think if a government of national unity does intend to uplift this economy, as we all would hope, infrastructure has to be on top of the list to get this economy going. And Raubex would certainly be one of my picks in the sector if a government really opened the taps to want to spend on general infrastructure rebuilding.
We'll move away from this one in a bit, but what is it about Australia? We often hear about all the similarities between Australia and South Africa, but when it comes to construction, even some mining, they're not all companies that leave South Africa to go to Australia quite land as they should or expect.
Well, as we know, construction tends to operate on very, very thin margins. It often surprises me that we've got these large construction companies, in many cases operating multi-billion rand construction contracts, and they make margins of maybe 3, 4, 5%, which is not a great deal of money for the risk that they take in potential construction scope changes and the risk of operating in foreign jurisdictions with local problems on the ground. So I think what Raubex did is they only operated in Western Australia. So they stuck to a particular region and they took on lots of small contracts where they actually wouldn't see any significant problems should anything go wrong. Where many of the construction companies that did go into Africa or Australia took on very, very large contracts. And if anything goes wrong, they basically see their shirt. So I think Raubex took on smaller projects, which built up quite nicely over time to build up a track record of standing. And that's what made them far more successful in moving into foreign clients, doing things slowly and in small pieces rather than one big hit.
I want to move on now and speak about Novus. Fascinating reading about this one. This company was once called Pearl Media. Yeah, let's talk about that.
Yeah, this company is a very interesting one. Listed probably 2015 at about 15 Rand 50, spun out of Media 24 or Nasionale Pers as we now know it. It was basically the print and publishing operations of the giant media company, which is now Naspers. But as we all know, over the last decade or so, print publication has become the dinosaur of the media industry, where everything is moving online and into the digital realm. We saw yesterday that Media 24 announced the closure of many of the established newspapers in this country to move them onto the digital realm. And that means there's less to be printed. So Novus Holdings, basically, upon its listing in 2015, was basically a dying animal, with its share price and its profits dwindling for years. But what the market wasn't fully aware of is it's sitting inside this aching and crumbling print and publishing business was a very juicy net asset value play. The share price at one stage was trading at 60 cents, but it had a net asset value of probably 7 Rand a share and nearly 4 Rand 50 in cash sitting inside the business. So an activist company called A2 Investment Partners came in, swooped up a stake of 18% from Media 24, paying a Rand a share, then went out to buy out many of the institutional investors, about 2 Rand 34, but now control 65% of the company. They've turned the business around, and they did a transformative transaction about a year and a half ago, buying the former Pearson education business, which is one of the largest providers of educational books in this country to the primary, secondary and tertiary education system, with very large contracts into government. Now that's a cash cow. It basically prints money, excuse the pun. So from a share price you could have bought maybe 4 years ago at 60 cents, it's now trading at 5 Rand 95. And in the last 3 years, it's paid you 1 Rand 90 in dividends. So the share price year to date is up 35%. You've had a Rand in dividends with recent results and a special. But in the past 30 days, as the market suddenly picks up on this company's cash generation and growth prospects going forward, the stock is up 40% in the last 30 days. So I've had a buy in the stock since 1 Rand 40 with a target of 6 Rand. It made that yesterday. And I revised my target to 7 Rand 50 in March. And I think it'll certainly get there in the next 12 months as a focus on artificial intelligence in education in the digital platform and renewed emphasis on divergence away from printing towards packaging and educational systems really powers the growth of this company, which is still a small cap. It's only 1.8 billion Rand in market value. So there is money in printing, but not in old-fashioned newspapers. You print things that people need, like books.
I actually love the story because, like you're saying, many companies that have had to keep up with new trends have just battled in this transition. Some make it and some don't here. And they're, like I read earlier, this ByteFuse acquisition that they've made, looking at AI within the technology business there. Anthony, it's very possible actually that in the next, in the long term, maybe let's say, a company like Novus could actually be at the fore of ed tech in South Africa, and that could really be a completely different business.
Yeah, you make a very valid point. They recently launched an AI app on your WhatsApp phone. So I would urge all the listeners to go into your WhatsApp phone right now and type in a code called MASKI, M-A-S-K-I, and ask it any question you like on education, and it'll bring you up past exam papers, it'll do you courses, it'll give you videos, tutorials, and Novus is spending quite a lot of money in the next 2 years, about 100 million rand, on this AI app to basically augment and assist their publishing and books business. Now, don't overestimate me here. Novus is not an AI company. It is basically adding on AI to benefit the learners and the teachers in learning in this country. So it's basically an additional tool. So if you're going to lock in the teachers and the learners to the books, and then have an extra AI tutorial and a system that just basically locks you into that subject stream and the company's intellectual capital, it should bode the company well. And I think MASKI at an earlier stage could be the dawn, as you say, of digital learning, which we as a country, particularly with all the learners that need upliftment in their education, could be the easiest and elegant solution going forward to uplift the millions of children that need better education, particularly using their cell phones.
Very exciting indeed. Anthony, I think earlier you would have told us exactly how you rate these. I think you said Afrimat 1, Raubex 2, and of course then Novus is a 3. Can it compete with these two infrastructure, I think giants at this point? They're the giants that are left.
Yeah, if I look at the stocks right now, they're all very different. We've had Novus up, as I said, 35% year to date, Afrimat 10.6, and Raubex 31.7. But if I'm looking right now at the things that could really power this economy in the next 12 to 18 months under the government of national unity, I would say my current ranking, I'd still have Raubex as number 1 because we all want better roads and infrastructure. I think Novus would be number 2 because education is incredibly important for the future of this country, not just for the young people, but for the entire nation. And Afrimat would be 3rd, not because it's a bad company, but I think the results to August will be slightly below market expectations and the share price may not go anywhere. So I'd say Raubex 1, Novus 2, Afrimat 3. But as a collection of free stocks in the new government of national unity and the uplift of the economy, I'd like to own all 3.
Well, Anthony, always a pleasure having you with us, and thank you so much for taking us through this one. Always fun. That was Anthony Clark from Small Talk Daily Research.